Charlotte McLeod with investingnews.com, and here today with me is Chris Vermeulen, Chief Market Strategist at thetechnicaltraders.com. Thank you so much for being here. Great to have you.
Always a pleasure, Charlotte. Yeah, thanks for having me.
Yeah, really good to be catching up with you at the end of the year. Our last conversation was a little while ago. It was all the way back in July. And I want to go back to that because when we were speaking then, talking about gold, and you were looking for 2650 to 2750 in the next 2 to 3 months. And that was pretty much exactly what we ended up seeing. So, of course, we've got to go back to that and ask you, where is gold going next from where we are now?
Yeah, well, for sure. So gold has been a very, very straightforward trade for quite a while. And if we take a look at the charts, we can see that on the monthly basis. The monthly chart is very accurate for gold. And when we take a look at it, this is the reason why we talked about more or less 2750 for the upside in gold, which if we were to go back to the start of the last super cycle in 2003, somewhere right in 2001 in here. If we use a Fibonacci extension, which is my favorite tool, I found it's the most accurate tool to project forward targets. And we're going to the bull market 2011 to the pullback in 2015. And if we carry this forward, this is where it tells us the momentum from this rally up and the strength of this pullback. Once it starts to build a base and then start a new cycle to the upside, which I wrote an article talking about the new super cycle for gold has started, then we should see the move up to 618 level. Generally, if you pause at the 618, you're going to go all the way up to this one level, which is the 100% measured move. And that's that 2750 area, which we've now tagged on the monthly chart. And now gold is taking a pause. Gold could still go higher here, but that easy run, that measured move is definitely played out at this point. So as much as I like gold, I own a lot of physical. I'm not planning on selling it. I do think we're going to see gold. If we were to fast forward a year from now, I do think we could see gold maybe push a little bit higher over the next month or two. But overall, I think we're going to see it pause and take a little bit of a pullback and build kind of a launch pad as the stock market, the economy, I think is going to soften potentially like by the end of January. We're going to see things turn. And then we're going to see a big move up in gold. And this peak right here is very similar to what I believe is the 2007, 2008 peak, where gold did the same thing. It rallied up, it paused sideways for a couple of years. And then we saw the whole world move into gold because they're worried about the stock market being overvalued, bubbles in real estate, all of that stuff. And then we had that pullback in gold with the rest of the economy, just because everything generally goes down together when investors are selling. And then we go into a multi-year huge leg. So that's what I see. If we were to look forward, a year from now, I think we'll have seen multiple months of the price going sideways or lower. And then it's going to be that big rally for 4, 5, 6 years. And that's when the miners are really going to participate. And we're going to see that everybody's going to want to be involved in the precious metal mining space because they're going to do those hundreds or thousands of % return when gold blasts off in this new kind of economic reset. So that's kind of what I see from the big picture of gold.
Yeah, and this is a perfect time for us to be looking at the big picture for gold as we are about to head into a new year. So from what you're saying, we're going to go sideways to lower before we have this move up. At what level would you be a buyer of gold? Because I know that people are still looking for opportunities to add more to their portfolio.
Yeah, so it's going to be after I think we see gold have a little bit of pain. Now, right now, we're seeing a little bit of fear in the stock market as you and I are talking. And in the previous session, the VIX had a pop of about 11% in the last session. So we're seeing money flowing out of small cap and aggressive stocks just this week, and they're moving into gold. So gold has got that safe haven play. And there's this chart that I really like to look at because I like to know where we are in the big picture of things. And this whole cycle here, this blue kind of cycle, this is the stock market cycle. And I believe we're getting very, very close to a market top. And this is when gold performs exceptionally well. It's also when, energy stocks perform exceptionally well. And so whenever there's a bit of fear in the stock market, I think we're going to see gold, silver, and miners want to move higher. And that is exactly what we're seeing this week. And really, they have been moving higher for several months because the whole world is getting nervous and they're moving into the precious metal space. So if I had to say, okay, well, where would I want to pick up gold, rebuy gold? It's going to really dictate how the price of gold sells off. If it's a controlled sell off or if it's a waterfall sell off, they kind of have different characteristics. But if we use a Fibonacci retracement from this last significant low, let me just zoom out on the chart a bit more. You can see this last significant low. If we were to use a Fibonacci retracement to the current high, the sweet spot for a market pullback that's still very bullish is usually between the 38% pullback. So it pulls back 38% of this initial rally all the way down to 50%. So we're looking at 2,200 to 2,350 would be kind of like that next major reset. And it looks like a really good spot on the chart because the market loves to flush out stops. So there's going to be people that have, if this level here is broken, it's going to trigger a lot of selling. There's going to be a lot of little lows through here that people have stops layered in. And then this ultimate low right down here is going to be where people are like, if it breaks that, I got to get out. And so I think we're going to see the market eventually reset. And this is, to me, is like the ideal setup is it comes all the way down and then breaks this low right here and people bail out. We'll see a big spike in volume as people get out of gold. And that will probably be the exhaustion sign that gold has washed out. It's spooked out everybody who couldn't take the pain. And then we're probably going to see some knee-jerk reaction and it's going to build a launch pad and then start to take off. So that's kind of my ideal sweet spot. Not a lot of people want to see it go back down to there, but it's actually a very, very strong sign because after that, then we can run for many years, I think, to the upside. If gold was to just keep taking off the way it is right now, it'll probably come straight back down in due time because things that go parabolic straight up generally don't have legs to be sustainable. We actually want it to take time, years, months, quarters, kind of to unfold and work its way higher. The slower something goes up, the more sustainable it is, the longer it can do it. And, I know people want fast gains, but fast gains usually equal volatile accounts if you don't know when to trim profits and get out before they come back down.
Yeah, I think that's really helpful to look at, and people definitely might not want to hear that news that gold is set to go lower. But as you mentioned, it's an opportunity, and we've got to keep in mind the long-term picture. And just thinking a little bit more about that, I know we've spoken about the super cycle that gold is in before. I believe you told us that has begun in 2019. So we're quite a ways into it. But maybe we can talk a little bit more about how that plays out for gold and the upside, just so that people understand the big picture on the price levels that could be coming there.
Yeah, so we could take a look at the monthly chart of gold, and super cycles are very big. So we could, until we get this next pullback, we can't fully project where that next upside target is. I mean, I can show you one, but it's not going to be super accurate. People always want to know where the future, like price is going in the future, but we do need to wait for as a technical chartist, we kind of need to wait for this pullback so that we can draw that next measured move. And so if we were to come back down to this level that I mentioned before, this Fibonacci retracement between 38 and 50% around this 2,300, we could use that and we could base price off of this next level. So this low up to the high that we saw just a month and a half ago, and then down to this low. And that will project forward where that momentum is. So the next stop, there'll be two stops. Generally, what we'll see is price will run up to the 618. It'll probably have a couple months pause or pullback. And then suddenly it should blast off to 3,500. So those are the next two levels to the upside. And so, I mean, I usually only measure one level at a time. I could throw a 200% move, but they don't become accurate. You're really best to let the market unfold, draw the next move. Not try to predict where you think it's going to go, with really loose price action. Let the price action allow you to draw it. And you have to be patient. People want to know where to buy, when to buy, where's it going, but it doesn't work that way. You have to let the chart draw the picture, and then you make your decisions as the picture unfolds. Or else you're really just speculating and you're guessing on a bottom and you're guessing on a top. And that's not what I do. I follow price, let the price lead, and we just have a good strategy to follow it to make sure if the trend is strong, we want to make sure we're part of it. If it's a weak trend, we don't trust it, doesn't meet our criteria, we don't get involved in it.
I think that's a really great reminder because, of course, people know that you're looking at data from the charts, but have to remember that you need enough data to make those further out projections. So that actually really helps me understand how you're looking at it. Mm-hmm. Before we move on from gold, I've got, I think, one more question. You had mentioned the gold stocks will have their moment. It sounds like it won't be for some time. So maybe right now is not the time to be in gold stocks. Would that be accurate, or what are you seeing there?
Yeah, I think gold stocks have had most of their move to the upside. What we tend to see is, I think gold, silver miners to the end of January, I think are going to want to go up and test the highs that we saw just a couple months ago. I think they're going to want to push up and maybe poke to a nominal new multi-month or multi-year high. So I do think there is some upside potential in miners, but I believe it is a short-term trade. It's really just a retracement back to the high. We're seeing as soon as people get a little bit nervous, they move into gold miners, silver miners, and precious metals. So there's a good chance that is going to happen. But overall, I don't think we're in this major stage like we've seen like back in 2009, where we see this huge percentage move to the upside. I think we're going to have to wait when the market corrects. When the stock market goes down, it pulls most stocks with it. And gold miners are stocks stuck in the stock market. So when the tide goes down, it pulls almost all stocks down. It doesn't really matter the sector. They have a downward bias. And so when we're in a bear market and we have a recession, you really don't want to hold any stocks, period, because they're all going to be weighted down. We're probably going to see the US dollar scream higher, which will help pull gold back. And of course, it'll also pull miners. There'll be a lot of reasons for miners to get hit pretty hard. And the question is, where will they find a bottom in here? But once they do, it's going to be just like the gold trade, where once it pulls back and we see gold miners coming to life and outperforming gold, then that's going to be our early warning sign saying, okay, typically we're going to see gold and miners bottom before the stock market does and before the economy does. And so that's what we'll be keeping our eye on. What are gold miners doing, and are they outperforming gold, and are they starting to turn up? And once they do, then we just have to wait for the proper setup on the charts, and we can say, okay, let's get into miners and precious metals in general and ride this next move up. And it'll be a great opportunity. But again, I don't know where that's going to be. It all depends on how the markets, the economy unfolds. Do we have World War III that gets super ugly and gold and oil shoot up, and that might skew things, right? Those are the odd black swan event that could pop up. But overall, now is like a trade. I think you can make 10, 15% to the upside of miners, as like with GDX, for example. But overall, I think you'll be able to pick it up at a much lower price down the road before the next kind of blast off, where they all become little golden rocket ships.
Okay, I love that golden rocket ship visual. So we'll keep waiting for that to happen. All right, so I want to throw in a question on silver as well, because we usually spend a little bit of time on silver. I imagine it's going to have a similar trajectory as you see coming for gold, but let me know what you're looking at there.
Yep, they're all pretty much the same trajectory. I think we're going to see silver move up to the end of January, and we're going to get up into these highs that we saw back in 2012. Silver might want to push up into this $36 range, poke a little bit higher. It is in a nice uptrend. I mean, we've got a nice trend moving higher. We have a rally, a pause, a rally, a couple tight little bull flags that are pointing to go back up and test the high from a month and a half ago. So I think we're going to go up. This is going to be a major resistance level, this whole zone in here between this high and this candle wick high. And of course, we got a lot of volume and volatility through here. So if it gets up there, it's a level. Most people will get super excited. They'll be like, "Oh, silver is going to the moon," but that's probably where it's actually going to get hit. When everybody gets super bullish, that means they already own it. And of course, when everybody's happy, the market likes to break your dreams, and then the market will reset and reset investors, right? So again, everything has got this upward move to probably the end of January, bullish for the precious metal space. And after that, I think you need to be very aware. You need to be like moving your stops up and locking in gains, because this could get wiped out in a blink of an eye, and reset with the markets.
Okay, and one more brief question on the precious metals, keeping in mind that you just said that they're essentially all the same, but this is a little bit of a historical question, I think. Okay. So we've seen gold and silver making these moves, and we're starting to get questions from our audience about platinum and whether there is historical precedent for platinum to follow gold and silver. I thought it would be a good question for you because you look at the charts, and platinum gets a little confusing because it's got the precious and industrial side. So how do you see it there?
Yeah. So if we take a look at platinum, this is again the monthly chart. You can see the 2000 huge shoot up in 2007, 2008, and then it just got hammered with the financial crisis, the bear market. It just goes to show how much things can fall. That was a 65% haircut. Silver also fell 65% during the 2008 financial crisis, but you can see how they can have massive recoveries. What I see with platinum is it's pretty dormant. Everybody always used to talk about platinum when I was a teenager. Everybody wanted like a platinum ring, and platinum was better than gold. Now it's like way cheaper than gold. It's funny how times have changed, but platinum is really in this sideways formation. It has been out of favor. Nobody's really interested in it. It's dead. It's in a stage 1 base. And this chart here shows a really good example of a stage 1, which there's 4 stages to the stock market. And a stage 1 is this kind of red stage, or to the right over here, this flat stage. I shade it orange and red because it's dead money. You're going to waste time. It's unpredictable. It's just ping-ponging around. Just ignore it and go find something else to make money in until this asset starts a stage 2, which is a bull market. And so platinum is in that flat stage, and the longer something builds a base, the bigger the rally can come out of it. There'll be a lot of people who give up on it, and eventually all those people will want to pile back in. So it'll make for a very big move. And I do think we'll see platinum do well. A really interesting ETF is this one, GLTR. And this is an interesting way to play the precious metal space because it is a basket of gold, silver, platinum, and palladium. And it has this giant cup and handle pattern, which is one of the strongest chart patterns. Gives you exposure to 4 metals with 1 trade. And it's moved up. And I think it's got a lot of upside potential come the start of the next big moves. I think we're going to see precious metals, gold and silver, pull this down again, and it might settle into these highs or somewhere down into around the $100 mark. But after that, this shows you a nice basket of the precious metals space because this includes platinum and palladium and gives you an overall feel of the space. So once platinum does kick into high gear, and palladium as well, we're going to see the whole precious metal space really take off because I think we'll see all 4 of them rally.
Okay. Thank you for humoring me on that one. I think it's again useful to go through that. So if we look over to what's going on more broadly, I remember heading into 2024, I heard from you and really many other people that this was going to be the year that we see the US economy roll over. We get that big stock market correction, and clearly you still see that coming quite soon. But why do you think it's been able to continue on up for so long, these major indexes continuing to go higher? What's happening there?
Yeah, I think there's a lot at play. I mean, the Fed and changing rates, the Fed is dropping rates before the stock market is even like pulling back. The way I have always experienced it is until Wall Street has a ton of pain and the super wealthy are losing a ton of money from falling stock prices and businesses are struggling, the Fed usually doesn't do anything. And here we've got the Fed thinking they're all ahead of everything, slashing rates already, and the markets haven't even budged to the downside. They haven't really done anything. So the Fed lowering rates is trying to keep the stock market going higher. Maybe it has to do with elections or, who knows? There's all kinds of stuff woven into it. In terms of the general market, when we look at it, I mean, we've been on this very strong move. I think what we're seeing here is the big AI move. We've got the Magnificent Seven AI has kind of trumped the market, especially when we look at the NASDAQ. We've got NVIDIA, we've got all these big heavyweights. They're all like 5 to 8% of the indexes, and they just keep driving this market higher and dragging it up. But when you lift the hood to the market and you look at where the money's flowing and how aggressive people really are and how there's a lack of liquidity, the market isn't really that strong. Now, the SP 500 and the NASDAQ look really strong because they're tech heavy and the tech's doing the heavy lifting. But in general, the Russell 2000 is just coming up to test a double top here in the overall market. We'll see how this plays out over the next month or two. The market so small caps are just starting to on the verge of making some new all-time highs. And right now we've got the VIX is very low. People aren't fearful. And they're piling into like all the ARK ETFs, Bitcoin, blockchain sector, autonomous vehicles. They're moving into all the sector ETFs that were skyrocketing through 2020, the COVID kind of boom in early 2021. And so I believe the market is running out of steam. We've got all kinds of different cycles topping here. Money is flowing into gold, precious metals, utilities. We're seeing all kinds of weird money flows and shifts, and the dollar is doing very well. These are all warning signs. But now the general public is piling into the aggressive stuff without any fear because the VIX is low. And usually when the general public piles into the aggressive stuff and they think there's no downside risk, that's usually the music's about to come to an end. So that's why I think December, seasonality-wise, is very strong for the stock market. For both gold and silver, if we look at the seasonality chart, we're kind of right here in the markets, and we're starting to see a little bit of a pullback. So a little hiccup for the next few days in the stock market should be expected. It's actually healthy. And then we're going to have a push to the end of the year for stocks. Here, if we take a look at gold has kind of already taken a little pause. It's already starting to push higher. It should go up even stronger into the end of the year. So in the grand scheme of things, I think the seasonality-wise and the momentum of people chasing and piling into these aggressive stocks is going to run out of momentum, I think, come January. And there's kind of like a saying, like if the month of January closes higher, positive for the month, we usually have a positive year for stocks. If it closes negative, we usually have a negative year for stocks. So it's going to be very interesting to see where all this shakes out by the end of January and what that kind of monthly candlestick or chart says about the SP 500. Are we positive or negative? So I feel like it's the last little hoorah kind of squeeze up in the markets. NVIDIA, I think a lot of things are starting to struggle. Trump getting in January, tariffs potentially kicking in. It's going to struggle. It's going to cause a lot of problems, I think, for some of the big multinational techs, the high dollar in tariffs with semiconductors. So there could be a big unwinding. And so that's kind of like the view that I see unfolding. Now, I should mention one thing, because I have been very bearish on the market for a long, long time. And I like to be prepared of what could happen. So I have a game plan. And when I look at the long-term strategy of the markets, it's very important. I like to look at the stock market like we have a rising tide environment. We have a falling tide environment. And of course, we are in a rising tide. Now, I have been bearish for a long time, but it doesn't mean we actually are betting on falling prices. We are long the indexes as a long-term investor and a short-term trader playing this. We just know that the music is going to stop, and we better have a game plan on the short-term basis to get out soon, and on our long-term investments to also get out when the tide changes. And that's the disconnect, Charlotte, that most people get. They're like, oh, Chris is bearish. He's been bearish for 5 years. I'm like, yeah, but that's not how we position ourselves. I'm just trying to mentally prepare everyone that eventually we're going to have a huge wipeout. It's either you get slaughtered or you see it unfolding and you take the proper actions and benefit from it. But you still have to follow the trend. And right now the trend is up.
Okay, I think that's really important to make that distinction between that outlook that you have and then what you're actually doing as that's going on. So really helpful there. And again, keeping in mind that you just told us how much uncertainty there is and that we're going to have to really keep an eye on the end of January there, I will ask about, I think I ask you this every time, but I'll bring it up again, the length and the severity of this move downward that we are heading toward and will get to eventually.
Yeah, that's a good question. I think we'll see like the SP 500 pull back anywhere from about 38% to about 55%. How long? I feel like it's actually going to be more like the 2000 kind of major market top, where it took like 3 years of kind of big bounces to the downside, like lower and lower and lower. I think it could drag out. A lot of people are anticipating like an elevator ride down, like a washout low, like a waterfall sell off. But the markets tend to do things you don't fully what you least expect. So obviously, there's going to be two scenarios. It's going to take several years to unfold, or it is going to be like a 2008 financial crisis, and like it just goes into a landslide, and it's fairly abrupt and lasts like 6 or 8 months. We don't know, and that's where we have to let the chart paint the picture so we can then analyze that and take action, because depending on how something moves changes how we need to approach it, how we're going to trade it, how to also identify a bottom. Knee-jerk reaction bottom is very different than a long, slow bottoming, stage one that takes a long time. So really, like, no one knows, right? And that's the reality of it. So let the charts paint the picture. Let's follow it, analyze it, and then take proper action as it unfolds. It's not what people want. They all want to know an answer, but that is the reality of trading and investing and managing positions. It's you don't go off what you think and what I project. You go off what the charts are doing and then manage your risk accordingly.
Yeah, you always speak about it in such an artful manner. It sounds very zen when you're describing how you watch the charts there. So always interesting for me to hear. And all right, one other point that I want to bring up is Bitcoin, which I don't think that we've ever spoken about Bitcoin before. But you're telling me before we turn the camera on that you actually got into Bitcoin for the first time, and I think you said about 10 years. So tell me what you see coming there. We've seen this move past 100,000, which was a big milestone. Now it's pulled back. What is the future looking like for Bitcoin for you?
Yeah, so Bitcoin has a chart very similar to kind of like the whole precious metal space, that basket ETF I showed you. So I haven't been really that interested in Bitcoin in a long time. Back when it was trading somewhere in the 40s here, I talked about how my downside target was 16,000. And I remember doing a crypto show, which I got laughed off the stage by the whole panel about my 16,000 prediction. And of course, it went right down to 16,000, which is pretty epic. The charts, that was like the epic kind of setup for a move down. But the change here is finally we have this giant cup and handle formation. As a technical chartist, this is one of the strongest chart patterns. You can also just say this is a bull flag. You have a flagpole going up, and then the flag is flagging down. That is considered the halfway point for the move. That's the first half of the move, and we can measure the second half using Fibonacci extension. So if I was to just grab the low and we go up to this high and we grab this low, this tells us where these next upside targets for Bitcoin are. And it is right up here around 109,000 is the next upside target. And we got into this a few weeks ago. We've played this move. We actually took half of our position off at 87,000. And now we're looking for about 108,700 as our next target, as a conservative target to get out. This is just the only reason I got into this is because I haven't played Bitcoin forever. And this chart pattern is like kind of the epic. I'm like, you can't miss this trade. This is like a trade you have to put on. It is a herd mentality trade, meaning the whole world is watching it. And once it starts, there's going to be one of these green bars or two of these green bars that just shoot up. And so we got into the trade, and I think it only took like a day or two, and we hit our 15 or 20% target, like that. That's how explosive it was and how primed and ready. And so right now, Bitcoin is just trying to digest this 100,000 mark, because everybody was saying, is it going to hit 100K, and is 100K resistance? And it is. 100,000 is a whole number, meaning people always say if it hits 90,000, I'm going to sell some. If it hits 100,000, I'm going to sell some. So when you're underneath these whole numbers, they act as resistance. And so we actually hit when we look at Bitcoin, especially on the daily chart. And if I was to draw a line right at this 100,000 mark, we came up and we tagged that 100,000 mark, and quickly we saw a little bout of selling, profit taking. It came back up, tagged it again. We saw another bout of people selling. We had some news with Trump hiring somebody, created this quick rally up. It was a news driven move. It's still trying to eat through this 100,000 level. Every time it gets at that level, new people see it. It's back at 100 and they get back online. They put in their orders. They sell some of their Bitcoin. So it's just trying to eat through that resistance. The longer it keeps eating through here, that weaker that resistance level is going to get. And then we're going to probably pop up to this next level. Believe it or not, when you take this and you measure it out, Bitcoin actually has the next major level at about 160,000. So it's a huge, huge difference from where we are right now. But I'm using this as just a pure trade. Get in, we hit our first target. Now we're going for target 2. And when we hit target 2, when you hit this green, this 100% measured move, there's usually a much bigger pause and correction. And that'll reset things for us to get back in again once we know where that next level will be, taking it one step at a time. So I'm just using it as a pure trade. I don't invest really. I own Bitcoin from like a decade ago. I haven't bought any more since, but this is just a pure speculative trade just to play this Bitcoin move because everybody's watching it, and that creates these giant, strong moves very quickly. Technical moves work out well.
Okay, really interesting to go through that, and definitely all eyes are on Bitcoin right now. Just a quick follow-up question. So what is your preferred vehicle for trading there?
I think it's such a global thing, right? Like I traded an ETF. I traded GBTC, which I got a lot of flack from. I told everybody to trade whatever they want. I said, if you want, trade the futures. If you want, trade actually the crypto. There's iBit. There's a whole bunch of them now, right? And the only reason I traded GBTC, it doesn't track exactly, but I use it also to generate my buy signals. It gives me I can tell the sentiment of Bitcoin from reading it when you compare the two of where it is. And it generated a buy signal telling there's actually not very bullish sentiment in Bitcoin. That crossed and turned positive. And I said, hey, this is it. We've got a beautiful monthly chart on Bitcoin itself. And the sentiment is shifting based on that. And so I just traded it because I'm expecting it to only last like a month or two and I'm out. If I was to do it again, I'd probably buy the iBit, which is what most other people seem to do. It has way more volume. It tracks like very close to Bitcoin price action itself. But because I'm not looking at it as like a long-term trade, I just traded the ETF that I'm comfortable with, that I know, because that's the one I follow. So I'm not picky. I just, if I see an opportunity in something I know, I'll take it versus going to an ETF I didn't know till that day. I'll be like, I'll just stick with what I know, right? So that's kind of what I do when I put on risk.
Okay, that makes sense. And all right, so we're getting to the end here. I do want to ask you, I know when you're looking at all these different trades, you are looking at the charts, you're trying to tune out what's going on. But I want to bring up, so you mentioned there's this Trump element to Bitcoin. And of course, there's a Trump element to a lot of things right now as we're heading toward this second presidency. So I'm wondering, if we look back at the first term, because we've had him before, can we use that as a blueprint to understand what sectors might do well in the coming 4 years? Or is there not really that analog there?
I don't know. You believe it or not, I don't really follow presidential cycles and what does well here and there. That's not my thing. I would think the fact that he was president and then had a time off and is coming back now, I think it's going to make him a very different president for some reason. Usually, when you think on something, you have time away and you come back, you come with a very clear vision and thoughts of, I did that wrong when I was back, when I was president the first time. So I think he's going to come back much more structured. Not only that, he has the world's smartest man, in his pocket, Elon Musk. I think if you're to play anything, it'd be like whatever Elon Musk is involved in is probably going to do well because everything is probably going to benefit his companies. And he's going to probably get the contracts and all of that stuff, right? So that's why Tesla is skyrocketing. So I don't know. I think the bet is more so Elon, and I think tax cuts. They want to streamline things for small businesses, which I think is why small caps and small businesses are doing well. They want to try and cut some of the red tape. I mean, I have multiple businesses. the government and the municipalities, like, I mean, they literally are trying to put you out of business. All you want to do is open up and help people. And there's so much red tape and policy, you can't do anything. So Elon wants to get rid of that. Trump wants to work on taxes. I mean, as much as people hate him, I mean, I think it's going to be a very interesting and a positive mix. Something needs to shake up because things are weird. So we'll just let them unfold how they're going to unfold.
I think that seems like one thing you can guarantee. There's going to be shakeups. What they are, we'll find out. Okay. All right. Almost to the end here. I do want to ask, I think this is a fun question. I like to ask this to everybody toward the end of the year. Looking forward to 2025, what do you think will be the best performing asset? Of course, keeping in mind all the market dynamics that we've already discussed.
The best performing one, I think it's going to come down to maybe two. I have two in mind. And of course it comes back to the whole Trump pivot. It's like, if he does all these tariffs and it makes inflation higher or keeps inflation up, we might not see interest rates drop. But I do feel like TLT, the long-term treasury bond ETF, I think bonds will go up. I think rates will eventually come down. So I really like that. The TLT monthly chart is epic. It looks just like the Bitcoin move in terms of, I think the bond market is putting in a major bottom, but depending on how inflation plays out, it might take a lot longer than people think. So I do like TLT. I like bonds. I also really like the US dollar index. So you can buy an ETF, to benefit from that or just hold US dollars. But I think the US dollar is going to do very well. And the US dollar index itself, I think, is going to perform exceptionally well. I'm Canadian, and I think the exchange right now is about $1.40 from the US dollar, Canadian dollar. I think we're going to see it go all the way to about $1.60 next year. So that's a 20-cent jump. So just holding US dollars alone is a great trade, and that's where all my investment capital is. It's all in US dollars. I only trade US ETFs because I believe I'm holding a currency that is going to add a lot more upside potential. And currencies generally move pretty slow, so it's a very comfortable way to watch your money kind of move. It's not a straight line, but in 2022, the stock market pulled back about 25%. The US dollar index rallied 17%. And the biggest pullback for that whole year in the dollar was less than 4%. So there's no volatility, you can stomach it. And currencies trend really nice. So the US dollar to me is kind of my core play because that's what all my money is in. And I believe the dollar is going to go up and the Canadian dollar is going to fall with falling oil pricing. Because I think oil is going to get pretty ugly, which we never even touched on. The energy sector space looks brutal, but it'll be interesting.
It will be interesting, and sad to hear you say that about the Canadian dollar. I'm here in Canada as well, and it's very painful to travel across the border. Yeah. Okay, any final thoughts? It's so bad. Any final thoughts before I let you go?
No, I think we really covered it. I think you asked all the right questions, and hopefully I kind of make it clear, forecasts, predictions aren't what we trade. You have to follow the price. That's where people need to understand. They're always like, oh, he's bearish. And, that's the part people just need to figure out is follow the price. But, eventually we're going to have a major market reset. Eventually one year I'll be right in terms of the forecast. But it's all about following price and not holding things that go down if they turn around.
Okay, very good thoughts to end in heading into 2025. Thank you so much for taking the time to go over all these different pieces of the puzzle.
Yeah, my pleasure, Charlotte. Always a good time.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Chris Vermeulen with thetechnicaltraders.com.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.